Now, we are always talking about S&P Global because when you are on Wall Street, when you're trading stock, S&P and Moody's are still the big names, right? But actually in this ESG world, there are now 5, 6 other players. MSCI is one. There was the Bloomberg Initiative, and there are a couple others. Sustainalytics, EcoVadis, there's Bloomberg, there's CDP.
Shall I go ahead and pull up that chart?
Yes, please.
Okay.
Because this is very interesting. Hope it gets big enough so people can see it. So there is now a company called ERM, which rates the different ESG scoring providers, right? ESG rating scorings, whatever it is. I mean, it's all done to be gamed anyway. And let me just explain one thing. When they did the survey, ERM, they sent out thousands of corporations, meaning the GMs of this world that need these ESG ratings to issue their bonds, and also thousands of asset managers asking how do you use them and which of the ESG people, providers, do you prefer? Okay, so let me first say one thing. Of the companies that need an ESG rating, more than half said that they're checking out 6 or more of the providers for the ratings, meaning they pay 6 companies to do it so that they can cherry pick the one that gives them the highest score. Did you hear that? And I mean it. I mean, this is crazy. This is in this web. I know. I mean, you know, I don't have much time, but when I dig into ESG, it's actually becoming fun because you're just there. You just think this is not possible. We're in such a bizarre world. This can't be possible. So
Real
anyway,
quick,
yeah, go ahead.
Can I just so everybody's clear on what we're looking at together? So this is a ranking of the quality and usefulness of ESG scores that are provided by each one of these ESG score providers from both investors and corporations, right? And so like this one says, we did an investor survey, and based on our scores, ISS ESG gives the best quality of ESG rankings, and CDP gives the best usefulness of ESG rankings. And when we do the same study for corporations, this is their results. Who need the money? So, this is their result.
Exactly. Okay. So let me explain this because this is absolutely hilarious. Okay. So the first point is, when you're a company, you have to run to 6 of them, pay 6 of them to run your company results, see whatever comes out of, and obviously you choose where you are looking the best, and the other 5 you shovel under the carpet, right? That's the first thing. The second thing is, when they do this survey, and I mean that they publish this boggles my mind, but so they take it from the 2 stances. Top 2 boxes is, you're an asset manager, you now want to use these scores. Which of the providers do you look at more, and which one do you find of high quality, and which one are really useful? So obviously the 2 top in both categories are ISS ESG and CDP. And you will never hear of them again because nobody uses them other than this institutional little world. And then the bottom 2 boxes is the same question to the companies that need ratings. And yes, CDP is there, but you also see ISS ESG is all at the bottom. So while ISS ESG is obviously doing the best job there, the companies don't want them because they get the worst scores. So they don't use them. I mean, this is absolutely crazy. Just this table shows what a shenanigan it is. And so why did I want to show this? I want to show you that because I just want to make sure everybody understands, as whenever, and I did ratings myself, but whenever you do ratings, you do scoring models. And as soon as you do scoring models, the whole game can be fooled, right? You just game the whole system, because as soon as you have a scoring model, you then do advisory to your clients on how you do that scoring model, which you bill triple of what you actually bill the score for, so that they learn how they can then fulfill their scoring model. And then once you have it, well, then you sell the rating afterwards. So this is a whole gravy train. This is a whole gravy train. Some of them obviously do a better job than others. It's maybe interesting for some of you to see those names. I don't think that they will matter a lot, because what really happened now is they've gone silent. They have gone silent because we're making enough noise. I mean, not only you and me, you typical, but there are some politicals out there. And actually, I despise that the right wing has taken this subject on, but on the other hand, somebody has to do it because they are trying to make it political. But as I said earlier, they made big mistakes in this whole thing as well, right? They are the groundbreaker in 2008 and what followed of this whole subject actually rising and this woke industrial complex becoming what it is. But we have more people talking about it, so they've gone more silent. But go on LinkedIn, put in the search engine ESG, and you will see the float of thousands of jobs in this industry, of people already in it and also job offers in there. This is a huge industry. This gravy train becomes bigger and bigger. Yes, more silent, but also by governmental initiatives, more rigid, more embedded into the way we do business. And I just feel we can't get out of it. Now, let me probably add a little bit something about Tesla, because I haven't talked really about Tesla. So Tesla in some of those models scores very well, in some less, obviously S&P being the worst of it. At least they've put them back into their index. That's a whole other story. But the thing is, Tesla typically has the attitude, don't give a whatever. So the I didn't say it.
I was about to.
Demonetized now.
I'm like, you know what? If kids are watching, this is good education. So I
exactly, you need to know all letters: A, B, C, D, E, F, L, everything. So Tesla doesn't care, but we're at a point where Tesla will have to care because their auditors, PricewaterhouseCoopers, will oblige them if this whole ISSB, IFRS stuff comes through. So while Tesla, I'm sure, will maintain the impact report the way they do, when it comes to financial reporting, they will have to hire specific people who trace these stupid indices the way this board thinks they should be done, and will have to comply. And it's crazy to think how much wasted time and energy will go into this.
And so PricewaterhouseCoopers would the auditing firm that essentially allows Tesla to report publicly, right? Because every public company has to have an auditing firm, right, attached to them. So you're saying they would have to force Tesla to do it because they are on board on this. And I'm assuming it's because they have many companies that they audit for that are pro ESG, and that's what's basically in their best interest. Okay. Yeah, it's all about the money. Okay.
It's all about the money. Yeah. It's all about the money. It will be a whole new branch for all these auditing firms. If you look on those, we don't need to pull them up again, but for those who have seen it, if you look into those 3 pages, the auditors are among the biggest donors to this IFRS. So for them, this is Christmas and Easter and everything else at the same time. I think it's on the 3rd one. These are all the German companies. I mean, it breaks my German little heart. Here it is, I think, on the bottom. It's on the last one. I think it's on the bottom. No. Look at the bottom. Deloitte. Oh. I mean, I can't read it really here. Ernst & Young.
Yeah. Deloitte, Ernst & Young. Yep. Yeah. Yeah. Okay. Wow. That's wild to me. So it is. I mean, I just have so many questions. So I
know, and I just want to go with your question, but I just want to, sometimes I think I'm so confusing when I talk about all this, but it comes from all sides, right? So please do ask all the questions.
It's not confusing. I think the reason why this is a topic that doesn't get covered often is because it's so complex and so vague, and it is, this is my opinion. This is why I think it's complex, or that's what's not reported on. It's because it's a web of information in a field that very few people naturally understand, which is capital markets and investing. There's very few people, like, for example, when the financial crisis happened, how many people knew it was happening? No one. Why? Because it was complex. Because it was a bunch of stuff that was based from the ratings agencies mislabeling things, and you had a bunch of derivative trading in the background and stuff like that. It was just a mess, and then years after The Big Short came out, which was the movie, and then people are like, oh wow, that's what actually happened. And you had news reports afterwards. So to me, it's just very reminiscent to me of that sort of story. Is that it's complex. It's not for the everyday person to sit down and it's. In my head, what I'm trying to do is how can I make a 15 to 20 minute long video based on what you're describing so that all the variables are easy to understand. And I have no idea how to do that because there's so many components. But here's the big thing that's coming to light for me. The eye-opening thing for me is that there's multiple firms that report ESG. There are multiple firms that will give ESG scores. So this, like that already. So when I think of a score, I'm a data guy. I'm a my background is business intelligence, data analytics, right? And mathematics. I'm a math major. So when I think about numbers, I'm like, okay, there's got to be a way to quantify something. Like this is the number. This is what math says. Math is a language of the universe. It doesn't like to lie because it physically can't. You can use statistics to make it look weird, right? But numbers typically are used to describe something accurately. When you have 5 or 6 different firms that are using numbers to describe something, and there is a vast difference in how people interpret those numbers, that to me says that it's not something that should be quantified. How many times have you worked at a company where somebody will give you a report that just is not really what it's describing? It's just a number that's trying to make it look good. You know, how many companies, when in the quarterly earnings, try to fudge the numbers here and there to try to make them look good, right? So it's akin to that, and I think this is why it's a weird story to track. It's because there's many people that are reporting this in a different manner. And then on top of that, you have a body and ISSB and others that are trying to get everyone to come on the same number, essentially, right? They want to say, this is how we're going to do it. But if you have 6 parties that are already disagreeing in how it should be measured, what is a standardization going to do? It's just going to take the average of the worst numbers, and then you have a crappy number out there that's trying to judge people. And then you're saying, okay, if you want money as a business, you have to abide to this random number, right? That's what I'm hearing.
Mad, right?